Hey, good afternoon, everyone. This is Chart Sniper again with a weekend review video of the markets and how everything has been doing and what to expect in the upcoming week. So, this is a weekend review for the upcoming week. Actually, it is a short trading week from 18th to 21st. So, Monday is a holiday and that will have some impact on what kind of moves happen for the entire week next week. Okay. So let's get started with analysis of the overall market and indices. I'll be trying to focus a little bit on long-term picture here now that the market has been sideways, and we'll discuss these things so that you can look at from a very broader perspective than just looking at what exactly we are doing on daily level. Okay. So to get started, this is a chart for the last 1 year in S&P, and we have seen like bottom left to top right a very constructive move. And if we kind of look at what is happening from the last September month, we're talking about a few months here, like less than half a year. So what you see here is there was a down move from September, and then we kind of rallied back up, and now we are coming back and revisiting the same levels. If you come and ask here what happened from September 1st onwards, as you can see, we can draw a line here, and we can say that probably nothing much, right? So we have gone higher in November, came back and revisited that level, and then we revisited that level in December also. We almost revisited that level in January also. So nothing is happening. A chop kind of sideways consolidation is happening. Okay, so that is at an outset what is happening overall. Not much. You can easily draw a box here, and we can say that it's kind of choppy in this range, right? So in the process, what is also happening is we are seeing a trend of a lower highs. This is a high and this is a lower high. So we are seeing that trend, which is not that good. Okay, so I can take an example where we can see this. So if you can imagine what is happening here, this was an effort to move higher, a fake breakout higher, and a lower high. So this forms a left shoulder, head, and right shoulder. Okay. So this kind of head and shoulders formation have certain pressure to the downside. Okay. So far we have been good. We have been um, bouncing back at the support of this uptrend line, but we are not sure anymore if that would bounce because of this inverse, sorry, head and shoulder formation. Similar kind of format happened here where there was a left shoulder here. This is the opposite of head and shoulders called inverse head and shoulders. We see a left and we see a big head down, and we see a right shoulder which is shorter than this one, and then that marked a bottom formation, and this could be forming a top formation also. Okay, and we have a lot of gaps as you could see to fill in the 455, 447, and a big gap at 436. Okay, if it wants to move lower. So let me overlay some long-term moving averages and see how exactly we are doing there. So what we are looking at is, let me switch to empty. So what we are looking at is a Bollinger Band on a daily level, correct? This is a blue line, it's a Bollinger Band, and we have a 50 days average, 100 days, 150, and 200 averages. Okay. So what we are looking at is slowly and steadily, the 20 days average is turning flat and probably downward. The 50 days average, which is strongly was pointing upward, is now slowly turning into flat. Okay, and what this says a lot of consolidation is happening, sideways action is happening, and you can at most tell that the market is in a neutral zone. Okay, not more than that, anything more than that. Okay, so we are in the neutral zone. If the market wants to go higher, it can go. If it wants to go lower, it can go. Okay, so when there is this kind of confusion on a daily chart, what we typically do is go and look at weekly what exactly is happening. And this is the SPY. Overall, SPY is a lot better than QQQ. We'll look into QQQ shortly. But what we are looking at is we are looking at multiple weeks of sideways consolidation. And after a couple of weeks, we are testing this 20 weeks average one more time. And we're trying to kind of bounce back. Okay. But we are making that lower high and lower low on a weekly perspective. So which is not good. So what are the next levels of support that we could see? We could see, like, if this 20 period average, 20 weeks average has been holding strong from all the way from May of 2022, right? 2020, COVID perspective. So from then onwards, once the rally started, every time it pulled back to 20 weeks average, it has been holding back. Okay, but that doesn't mean it will hold again one more time now. So we should be looking for some situations where the market is trying hard to go higher. When it can't go higher, what typically happens is it will give up, go lower, and then bounce back hard. Okay, so a lot of bulls and bears are fighting. They're trying to kind of keep the market afloat, but there is a very good chance that when this kind of weakness happens, where on a daily basis all the averages are kind of turning flat and it is in the neutral zone. So what we are looking at is we are looking at a sorry, potential droop over scenario. Okay, and these kind of patterns also help in that. So I want you to be open to the possibility that there might be a steep pullback to some lower support zones, so that the market can find reason and gain some momentum to move higher. Okay, so overall what we are looking at is, when we take this entire range, right? So this probably might be uh, a little bit messy chart, but what we are looking at is we saw a bounce here. Let me go back and draw it for you here. And let me switch it off. So we are from the bounce that happened from October levels to all the way top, we are still holding above the 38.2% retracement. Okay. And what it means is if you break it down into three parts, we are still trying to hover in the first one third of itself. Okay, and it's very possible for it to move down to this level, which is like lose two-third of the value and still can be bullish. Okay, so that's why the line is yellow, and even if it pulls back to that 446 level, it can be bullish. Okay, so with that overlay, what we can see is we can see that probably SPY visits the 100 days average now that it lost 50 days average, or it can go all the way to 150. And while this is doing all this dance, this 200 days average can start reaching this 446 level. Okay, in the process it can also fill these gaps that are open. Okay, so we are still like kind of SPY overall is bullish. It's the first one third of the entire move, and it can also pull back to the two third, like the 61.8 retracement. Okay, that's quite possible. I want you to be open to that possibility. Okay, so now let's take a quick look at how QQQ is doing overall. It has been pretty weak. Okay, to say the least, and the situation there is it has already lost 50 days from a long time ago. Okay, and overall when we go and look at what happened from October perspective, this is the range and it already touched that two-third level. SPY is still in the upper one third. This actually touched pulled back almost two-third of this value. So this probably in the tech sector can be a support. Okay, we still have one more gap left at 360 level, and when we are looking at this green trend line that you are watching, and this big channel that you are watching overall in the long term, we are looking at 1 year time frame. Every time it pull back that big, it kind of acts as a support. Okay, so now can it bounce higher from here? Yes. And what could be the catalyst, right? The earnings could be the catalyst. We have earnings starting in couple of weeks, all the major earnings. So if those earnings are positive, this market can make that next leg higher. Okay. So now that we try to bounce in the December and also in the January 12th, right? So that bounce could not get carried on. Okay, so that is why it formed a lower high. So that's not that constructive. But whenever we see that trend changing, that there is a potential for it to kind of bounce back because of earnings and stuff, it can do that. And we will be kind of waiting to see that it moves above this trend line to start with. That is the first step, right? So we have this downtrend line in terms of a bigger consolidation. As you could see, if you take that yellow line and the green line, it's forming a symmetric triangle kind of formation there. So we can do a lot of dance and consolidation here for completely one more month, or we can just puke and then bounce back from the support levels. Okay. So if you can see that this is a slow consolidation that's happening. As you can see, it's a channel. It's forming in this channel. It's a kind of oscillating in this channel, and it could continue for more time also. There are a lot of levels and a lot of resistance for it to cross. But the direction of this entire channel is pointing downward, and that's what the overall trend is. So now let me overlay some of the averages that we would like to see on a daily level. On a daily level, this last 100 days average, it is finding support near 150 days average. There is nothing preventing it to kind of visit this 200 weeks average, 200 days average. Okay, and that would be probably a big support. Okay, so 200 days average, it has not visited in quite some time. So there is a very good chance that it might visit it, and I would want you to be prepared for that move and probably have some cash on the sidelines instead of deploying it now. Deploy it when it pulls back to the 200 days average. How is it looking on a weekly? On a weekly, this is kind of maybe it's better for me to kind of move to an empty one. On a weekly, it was trying to hold about 20 weeks average, right? But now this week it's kind of a very negative, where it completely closed below the 20 weeks average, very similar to last week, but actually tried to move away, but it was completely pushed down harder. Okay, and 50 weeks average is around 357, and it also aligns with on a weekly basis the lower Bollinger Band. So the 357 target might be something that finds a support. And when we go and look at that, remember that 357, and we go and back and see on the daily chart, it is a little bit around 364. Not a little bit, I mean, it's a little bit lower. But yeah, so I think the 200 days average needs to be broken first before it can visit the thing. Okay, and overall the trend is looking constructive. Here there were 2 weeks below the 20 weeks average, 2 weeks below, and 2 weeks below, and third week, this is like second week. So we could anticipate that bounce again, and we have to wait and see. There is no clear direction at all. Okay. On a monthly, let's go and see. On a monthly, what I would like to see is I would like to go and add a 5 average to this one so that we can see how exactly this is doing, right? As long as monthly stays above 5, we should be okay. No, I mean it kind of lost that 5 months average, right? is losing that in January. Okay, so it closed. I mean, still the January there is a lot of time left, and it might bounce back and close higher. But we are looking at an average that is turning flat and probably downward also. So we have to be careful about our positioning, our direction. Overall, it's kind of doing sideways chop, and it could go and visit the 200 days average also. Okay. So that is at a very high level what is happening with SPY and QQQ and why it's kind of neutral and it could go in any direction. Um, and also what I would like to discuss next is overall the interest rates and how it will going to impact, right? So for example, when we look at TLT, so this is a 20-year bonds. They have been closely tracking. I mean, you can use this to track the technology or QQQ, and it has been trying to kind of hold support here on these previous levels. Okay, so as long as it holds supports there, which means like tech stock QQQ also is kind of trying to hold that uptrend channel that we saw and bounce back. Okay, so we have to really wait and see. But once it starts moving down below, then that can create a real problem. Okay, so that's one thing. The second thing is interest rates increase, right? So which means like there is a expectation that inflation is going to happen and the Fed is planning to increase the interest rates and stuff. So what market typically does is when the Fed announces that it's going to do three rate interest rates hike, okay, it doesn't wait until the interest rate starts being hiked, like they start hiking the interest rates. Okay, so it starts correcting itself before even that happens. So for example, this down move could be for the upcoming first interest rate hike probably in the next 2 months. Okay, and this rejection here is for the potential another interest rate hike possible in the in 3 months from now or 4 months from now. This is forward looking, and actually a lot of people might think, okay, we have some more time before the interest rate starts, it can bounce, but actually the market is always forward looking, and it tried to position itself to take into consideration any bad news that is about to come. Okay, so by the time they really start rising interest rates, the market could slowly take in take itself down towards this 446 level, and bake in all the potential bad news that could come by the interest rate hikes for this entire year by the time it moves here. And then actually when the interest rate starts kind of going higher, at that time everybody think, okay, now the market should fall down. But what the market did is it already fell down. It already adjusted itself, looking forward 3 months at a time. Okay, at that time when they notice that okay, it's the interest rates, only three interest rates this year, and possibly Fed is going to wait and see, or some kind of positive news starts coming, right? Then it starts to kind of take away some of this negativity that already baked in and bounce hard. Okay, so that's what it's anticipating. It's forward looking. You have to think that whatever the market is doing right now might not make sense to you, but it is might make sense in the context when you look forward 2 or 3 months what's going to happen in 3 months from now. And that's why this head and shoulder formation, and then probably a pullback in SPY to that two-third area might still happen. Okay, so with that, let's quickly view at the VIX, what exactly it is doing, and laying over some averages. It is doing a lot of consolidation here on a daily, and we could not say what exactly it is doing there. So we may have to go to some intraday time frames. Okay. So there was a pullback, and it's still kind of staying below 20, which is good. Okay. and we can actually draw this downtrend line now that we see that it's kind of respected it couple of times. So that is the downtrend line. We would want it even on a bounce that happens. We would want it to kind of pull back up. This can be bull flag, right? So it went up, it kind of consolidating and pull back to 20 hours average, and it could kind of bounce back up and still stay below 22. That's fine because that is the downtrend line. As long as it doesn't go above 22, we are good. But once it starts going above 22, it can become very tricky. And that's when the market, once you see the VIX going above 20 and above 22, that might be causing the market to kind of come down aggressively, like we were seeing. The head and shoulder formation is materializing, and it kind of moves strongly, and this might move all the way not only up to 26 or even higher. So that down move will be very quick, and then I don't want you to be part or trapped in that kind of down move. Okay, so we'll be looking at and seeing, like, if VIX makes any move there. And from put calls perspective, right, let's go and see. That's a very high bounced all the way to 0.85. So when did that happen last time? Last two, think, yeah. So yeah, 0.85, 0.89 is a very high level, and we did not see it we saw it in September, and we saw it in July. So what we are looking at is there was a lot of panic. There was a lot of panic on Friday, right? 114, and which means a lot of people bought insurance. A lot of people are concerned that the market might go down. It might go down on Tuesday open. Okay. So remember, when we look at this earnings thing, and what kind of earnings we have upcoming, as you could see that a lot of earnings are starting to you can see on 19th, 26th, 25th, right? The big like 20 from 20th onwards. So what it can do is when the market opens on Tuesday 18th, it can gap down very big, and then break down, cause the VIX to rise, and then starts going higher into the earnings season. So coming up to the next week, which is a short week, what happens is typically nothing much happens in that week. If there is a gap down on Tuesday, the market starts to go really, really down because of this high put interest rates or something like that, then on Wednesday, Thursday, or Friday, it starts to bounce back and kind of ends flat the short week. On the contrary, if we see a lot of strength in the Tuesday and Wednesday, then we might pull back a little bit into the Thursday and Friday. Okay, so that's what typically short weeks happen because there are a lot of people who are on a break, not trading actively. So that's why there'll be some volatility, but it typically waits for the next week to come. Okay, this is a little bit, I would say, relief if you wear a contrarian hat, which means a lot of people are thinking that the market will go down. It could go down one day, and then probably it will shortly bounce back hard into that Jan 21st expiration, trying to burn those puts. So if this bounces back, if this pulls back quite a bit on Tuesday, that would be a good time to sell some puts of Jan 21st expiration, hoping for the consolidation. Okay. Um, what else we typically look at? We look at SKEW. The SKEW is below 133, so not a major concern. It actually came out of the overbought stuff here, so it's good. I would like to see it stay lower, so that also gives us some consolidation, saying, okay, maybe the pullback could happen, but maybe it doesn't kind of fall apart very quickly. Maybe a slow grind lower could happen. Okay, so not much is anticipated there. So that's pretty much at a very high level the SPY QQQ, and we can quickly look at what IWM is doing. It has been from March. Actually, let me actually get this guy and activate it to represent a broader range. So what we are looking at is from February of last year. Okay, nothing happened from February of last year, and we are, if you see the, if you go back 1 year exactly, we are at the exact same levels as we were 1 year before in IWM. So nothing happened in entire 2021. Okay, so before anything happens, like you see, some negativity came after this break higher, fake breakout higher, right? So in the same way, a negativity can happen on the other side where it tries to kind of breaks it lower of this range, like quickly break down lower, and once it breaks lower, it can start picking up and going again higher. Okay, so there is no direction in small caps. It's completely neutral for the entire year. And when you look at Dow Jones, it is actually more constructive, but it also gave up quite a bit in on Friday, so which is not good. So when we look at four sectors, all the four sectors, Dow Jones was kind of stronger, but it also gave up and probably it moved below some critical averages also. Yeah, so it closed below the 20 days average and tried to kind of lose the 50 days average. So this is also joining the party of bearishness, but at least it's above the 50 days average. Okay. So that's pretty much it. SPY is looking kind of neutral, a little bit concerning. It's below 50, so it's not that great bullish yet. QQQ is below 50, had for a long time, and also it's kind of probably trying to find some consolidation support zone here, but it could puke and then find 200 days average as support. Okay, but for now it's below 50 and below 100, and yeah, it's very close to seeing that 200 days average visit. It wants to do that, looks like that. Okay, and from the IWM perspective, it's below all the averages, 200, 150, everything together, bunched up together, and probably this is the time where the weekly shows that. So the weekly 5 days, 5 weeks average is kind of pointing down, and that could continue lower along with that as long as it stays below that, right? So that's pretty much it. Short week ahead, earnings coming. There is a possibility of a potential bounce into the earnings, and also there is a possibility of the market rolling over. So it's completely neutral. I would want you to kind of watch it more from a silence perspective than pick a direction and play the direction. There is a lot of choppiness, and there will be a lot of choppiness as Fed kind of starts changing their tone from, they want to raise more interest rates, and then they were looking at some um, economic data also, and they kind of keep going forward and backward with their names in the same way. Market also can keep doing that. So you might see whatever you saw in IWM, like a probably 6 months to 1 year, same range. No, chop in this range. Okay, a chop in this range, it can pull back to this level and then bounce back and stuff. Okay, but what we would like to see is, we would like to see it going above these levels. Okay, until it stays below those things, it can continue going lower and stuff. Okay, so you can't expect whatever that you got, like 25% returns in 2021, 2020. You can't expect that in this market, and this year probably is going to be, um, I would say, next 6 months a consolidatory sideways move, and then probably towards the end of the year, maybe it makes that next leg higher. But you can't expect overall that huge gains. So I want you to kind of fine tune your trading mindset and expectations, and learn how to play this sideways action or a range bound action than, looking for some directional upward or downward move. Okay. So thank you very much for tuning in. I hope that was helpful. Stay cautious. Enjoy your long weekend, and yeah, see you in the next weekend review video. Thank you very much.